This is why you should seriously think about trading options. Take it from a normal 21-year-old with no prior experience that is new to investing. I'm learning as I go on, and I decided to make a YouTube channel to be able to look back when I'm older and to help those who are also just starting out. In the videos I make, I show you guys what works for me and what doesn't, so you don't make the same mistakes I do. To give you guys a quick background, I first started investing in December of 2019. I started with an ETF, a very safe investment but also low returns. Then I started to branch out with individual stocks like Tesla, Netflix, Apple. I was making capital gains, but I kept looking for other ways to make money. That is when I learned about dividends, which is getting paid for just owning a stock. I was so hyped when I got my first dividend at $1.43 from VU because I made $1 while sleeping without having to do anything, a source of passive income. But as many of you know, dividends are slow. Most companies pay you every quarter, which is every 3 months. So I started to look for other ways to make money. That's when I found trading options. And to tell you the truth, it took me a while to understand it. It is a pretty complicated concept to wrap your head around. But I'm glad that I decided to take some time and really learn about it, because it definitely paid out. I will show you guys in a minute the profits I made. I urge you to do the same. Learn about options, study them. There are a lot of videos out there on YouTube that make it very simple. They draw and they do all these nice things. After you learn about it, you can trade with a paper account, fake money, and see how it goes from there before you start trading with your own real money. I learned about trading options 5 weeks ago from a YouTuber called Tech Conversations. I'll put his channel in the link below if you guys want to take a look at it. He was trading options with a strategy called the wheel strategy. And just know that this strategy is not something he came up with. It is a very well-known strategy where you can make 3 separate profits in a single trade. I made a video where I do my best to explain the strategy in every single detail that I can, and I have linked it in the description below. After I felt comfortable with the knowledge that I had, I started to trade. And here are the results. In 5 weeks, I managed to make a return profit of 22.6%. I started with $14,800 and made a profit of $3,389. Keep in mind, you don't need that much money to get started. Even if you have a small account, you can trade options with Bank of America, AT&T, and Coca-Cola. These are great, cheap, and safe stocks. The profits I have made is me doing the wheel strategy only. It has not failed me once. If you take a look at the videos I have made before, you can see my journey trading with AMD, Coca-Cola, and Bank of America. Learning about trading options and just jumping in has definitely paid off. For example, if I would have gotten my $15,000 and invested it in an ETF, I should have expected a 12% yearly return. So in 5 weeks, that's about 1.15%. That's about $170 off my $15,000 investment. But I made almost 20 times more than that using the wheel strategy trading options. Now, I'm not saying if you trade options, you will see the exact same return, nor do I expect to keep making this return all year round. What I'm trying to get across is that I'm a normal guy who started investing, is looking at ways to make passive income, and trading options is working for me. Now, I'm going to show you the strategy in real life. I'm going to start the wheel strategy by selling 2 put contracts with AMD and 1 with TNA. So if we take a look at AMD, we'll see that right now it's at 77, close to 78. If we look at the past week, the lowest it's been since it announced earnings is about 75, just under 76, and just under 76. So if we go to trade options, sell a put because that's the first part of the wheel strategy, and expiring August 7th, which is on Friday, we have our premium right here and we have our strike price right here. Remember that when we sell a put, we want the stock price to be above our strike price so that we don't get assigned 100 shares. Obviously, the lower you go in strike price, the lower the probability, but also the lower the premium. So right here, if we take a look at 76, that's $96 in premium. Right now it's at 77.6. The probability of it hitting 76 is quite high, so I'm thinking more about 75. 75, we have a premium of $68. So if we take 68 and divide it by our collateral, which would be 7,500, multiply it times 100, and that's our percentage return, 0.9% in 1 week, which is not bad. If we were to multiply this times 52 weeks in a year, we would get 47% return annually, which is way better than an ETF. That's 12%. I'm gonna go ahead with the 75 strike price and sell 2 puts. That's gonna be $136 in premium that I'm gonna be given right now as soon as the contracts execute. Okay, now I have to wait until someone buys my puts, and then I'll be given the premium. And I put $15,000 as collateral because 2 contracts, each one at $7,500. And now we're going to go to TNA. If we go to trading options, again, selling a put because that's the first part of the wheel strategy. Let's take a look. TNA, it's a little bit more risky. If you go the past month, it did drop to 24. This is a low cost ETF and the premiums are a lot better. That's because it's a lot more riskier. So if we go to 28.5, that's $41 strike price. If we go at a strike price of 28.5, that is $41 in premiums. If we take 41 divided by 2,850, our collateral, multiply it times 100, and that is 1.43% return in 1 week. That's not bad at all. Let's take that. The probability is 79% chance at a profit, so that's pretty good, pretty much in the 80s. So let's go ahead. Now we have to wait to see until someone actually buys the puts from me, pays me the insurance, pays me the premium. So I'll check back in a couple minutes. By the way, I did close my Intel call. If you look down at the Greeks, you can see theta is at $2. So the more I hold on to this, the more I lose. So I decided to just, save $6 that I could, because Intel, I expected it to jump back earlier last week and this week, but it doesn't look like that's gonna happen. So I sold to close and got my $6 back out of the 72. Definitely took a big loss there of $66. So after a while, our puts did in fact execute. What I mean by that is someone bought our puts. TNA right now is at 35 cents a share and AMD is at 70. I added it in my portfolio. By the way, this portfolio is in the description below, so you guys can click on it and look at it too. So this week I made $168 just off premiums with a collateral of $17,850. That's a percentage return of 94.94% in 1 week, which is not too bad. If it's basically just 1%. If we were to do that every single week, that's a 52% return, which is much better than an ETF that's only 12% a year. So I'll keep you guys updated with what happens, if they execute, if they don't, if I sell them earlier, if whatever happens with these contracts, I'll let you guys know what happens. Thanks for watching, and I'll see you guys on the next one.